Okay, we're going to do an update on the U.S. equity markets. I'm going to focus on SPX, the S&P 500, and this will double as a sort of cycles 101. And so we will start on the weekly chart. So there are three main cycles that people follow, and there are larger cycles as well. But the three sort of most common ones are starting from lowest time frame to highest: the daily cycle, the weekly cycle, and then the yearly cycle. Daily cycle, as it sounds, measured in days. Weekly cycle measured in weeks, and the monthly cycle measured in months. The yearly cycle is measured in months. And so we'll start on the weekly cycle. For the S&P 500, this usually lasts around 20 to 25 weeks. And so just thinking about the way this chart is labeled, this moving average is the 10 period moving average. That's generally what you use in cycles analysis as just kind of a gauge for sort of mean reversion. When you cross below that average, it's bearish, obviously, and when you cross above it, it's bullish. And the way this is labeled, the numbers denote the week. So this last cycle was started here because this was the last week of this cycle. So this cycle here, before the one that we're in right now, lasted 31 weeks. And so that's what this 31 means. And this 26 means this is week 26, and this was the high of the weekly cycle. So every cycle has a low and a high point, right? Once you reach the high point, you're now descending into the low. And so cycles are always measured from low to low. Some people like to measure from high to high as well for almost anecdotal purposes, but the actual cycle is always measured from low to low. So again, looking at this chart, this is the cycle that was, the COVID crash. That cycle lasted 26 weeks. The next cycle, this one here, that coming out of the COVID crash, lasted 27 weeks, and then the next one 24. So where the top happens, the high is really important. Like, look at this cycle. The high happened on week 24, and the cycle lasted 27 weeks, which means the low happened on the 27th week. So you only descended for about 4 weeks, right? And this one, also very bullish. The high was on week 22, the top high, same thing, and then you had your low on week 24. That is called right translation. So when the high comes later in the cycle, more specifically, any point after the midpoint, the cycle is right translated. So as an example, these are all right translated cycles so far. This one, because. So let's use this cycle as an example. So that starts here and then ends here, right? I'll zoom in. This cycle lasted 24 weeks. So once you get to week 13, if you have the high on any week, if the high happens on week 13 or any week after, then it's technically right translated. Another way of thinking about that is it spends more time going up than it spends going down. Right. And then the opposite is also true, that a cycle can be left translated. And this is the S&P 500. There really haven't been that many left translated weekly cycles in the past, like just even going back to 2018. Here's one that was mildly left translated. So the high happened on week 8 and the cycle lasted 18 weeks. So any point before week 9 would be left translated, the opposite of right translated. So it spends more time going down than it spends going up, right? And so that is one element of cycle analysis, understanding whether it's going to be right translated or left translated. And it's incredibly important because this is the advancing phase, which is to say the point between the low, or I should say the start of the cycle, and the high of the cycle. And so it's rather obvious you want to be long during the advancing phase. it's really important to know if you are in the advancing phase. It's equally important, maybe even more important, to know when you're in the declining phase, right? Like when you're in the declining phase, you do not want to be long, right? And if you think about that, again, going back to right translation and left translation, in a left translated cycle, the declining phase, the phase after the high has happened, lasts longer than the advancing phase. And so if you've identified something is in the declining phase, that's not the time to buy in. If you're in something and you've just maybe detected the declining phase and it appears to be left translated, it means you're going to fall for longer than the rally lasted, and it might make sense to get out and sort of wait for higher ground. That's one of the, I would say, fundamental reasons cycle analysis is helpful. And I really would just think of cycle analysis as a way of adding a little bit more quantitativeness to like trend analysis, right? Because all this is saying is this trend, this uptrend on the weekly level lasted 26 weeks, which is better than this uptrend, which only lasted 8 weeks. And when you think about it in the context of a trend leg and a pullback, that's all a cycle is, right? This was the up leg, this was the pullback, and then we've come out of that pullback, right? And as you can imagine, a cycle can be bullish or bearish. So the S&P 500 in the last sort of, more or less 10 years has been more bullish than bearish. So most cycles have been right translated. Here's another left translated cycle, mildly left translated. Top on week 7, the low comes on week 19. But other asset classes have had very, very left translated cycles. And most importantly, right now, the Nasdaq 100 is setting up for a left translated weekly cycle. So the high happened on week 7, and we're now on week 14. Next week starts week 15. I'm sorry, actually, this is week 15. Last week was 14. I forgot to update this. And so if you think about going back to this is now the Nasdaq 100, the QQQ to be specific, the ETF. This followed a very similar trajectory to the S&P, albeit with even more upside. And the same kind of idea, you can see most cycles have been very right translated. This cycle lasted 22 weeks. The top didn't come until week 20. But look at this. If you look at the last 4 weekly cycles, you have a top on week 27, week 20, week 23, week 20. One of these is not like the other, right? This has a top on week 7. Now we're in week 15. If we assume we get something around 20 weeks at most, or at least, then that implies we have another 5 weeks to fall. Now I'm expecting we'll get to 350 at least, but considering we already got to 360 as of yesterday, seems likely that we're going to undershoot that by a bit. And the way I think about that is this is the last weekly cycle that happened, or I should say this is the last weekly cycle low here. It lasted 31 weeks. Given the fact that we were so left translated, top on week 7, maybe a low on week 20, it seems likely that we're going to break the low for this cycle, right? And so that's another cycle concept that's important, and that's called when a cycle fails, which is to say when one cycle goes below the low of any previous cycle. And obviously, if you think about it on the weekly level, the higher the time frame of the cycle, the more significant a failure it's going to be. And so it looks like it's almost certainly going to cut through 350, which was the last cycle low, and maybe come down and take out this other cycle low here at 300. That would be a really scary drop down to 300, but totally not out of the question given I don't expect a bottom until maybe the end of February. But again, that's assuming we get a 20-week cycle. It's entirely possible that we get something shorter, especially since this was longer. And you can see the cycles are generally, like the S&P, around 20 to 25 weeks. Some, we've even had some as short as 17. Notice that cycle in the S&P was 18 weeks. So the QQQ is much more bearish than the S&P 500 right now, but because there's so much overlap between those two indexes, obviously QQQ is going to drag the S&P 500 down. And so we talked about the advancing phase and the declining phase, very important concepts. We talked about right translation and left translation. Right translation is bullish, means the advancing phase lasts longer than the declining phase. Left translation is bearish. And we can look at something like gold to get an idea of left translation on a weekly cycle level. So you can see here, for instance, this weekly cycle low is higher than this one. So that's bearish. It's a downtrend. The prices are moving lower, and there have been other times, like you can see this is probably even more clear. You can see this is one weekly cycle after another. Each of the highs is lower and lower. So it's another way of representing a downtrend, and it's telling you this little rally lasts 9 weeks, and then we drop for another. I think that's like 17 weeks. So cycles go both ways. They really just help you quantify the trend, whether it's up or down, and then you can be more cautious or more bullish depending on where you are in the cycle. But you always certainly use price action as your number one guide. And so we talked about the cycle high. And one thing I will say is that you'll see it abbreviated as ICH. People call the weekly cycle sometimes the intermediate cycle. You'll also hear it called the investor cycle. So I'll usually abbreviate it on Twitter as the ICH. And so whenever I spot a new weekly cycle starting, you want to be on the lookout for the ICH, because again, the ICH is your cue that you need to get out because you're now entering the declining phase. Now, context is important because in this case, for instance, it wasn't really that bad. Again, we had our high on week 24 and the low was week 27, so not all that terrible, but this is probably one that you didn't want to be long, right? We had the high on week 13. This was a long time to decline. So once you spotted this high right here, this was your swing high. Or I think actually it's this. This looks like it's a marginal. This is like a back test that failed. But once you spot that high, you need to get out, essentially. And if we zoom into the daily chart, all of these same exact concepts apply to the daily. But again, the weekly is more important because it's the higher time frame. So for instance, we are now on day 32 of the daily cycle. This is pre-market, so when the market opens, it'll be day 33. And again, going back to the weekly chart really quickly, this is week 15. And so we probably have another 5 weeks left in this cycle. So if you think about that, that probably means we're going to get some kind of daily cycle low. So the same way you have a weekly cycle low, you have daily cycle low. So you have multiple daily cycles inside a weekly cycle. And it can vary. Sometimes it's 3 daily cycles, sometimes it's 4, sometimes it's short and it's only 2. In this case, this is the second daily cycle from this intermediate cycle. So again, I'll go back to the weekly. In fact, we'll just we'll look at them side by side if we can really quickly. So you see this is so that's your daily and this is your weekly. So your weekly is on the right here. So you see this week 31 low is this here. Now, it's interesting because the low came on week 31 and it also just happened to be day 31 of the daily cycle. That is literally just a coincidence. But you can see this has been our intermediate cycle right now for the S&P. We had our high on week 13, and you can see that was actually 2 daily cycles. So we had this first daily cycle lasted 43 days, and that was approximately this. So this low corresponds to this low here. So you could say this is what some people call your half cycle low. So this was your half cycle low for the weekly cycle for all intents and purposes. And then we started a new daily cycle. And this has been our high for the new daily cycle, which also turned out to be our high for the weekly cycle. So the high for the daily cycle happened on day 21. And so the same concepts apply for the daily. A daily cycle can be right translated or left translated. In this case, this first daily cycle from this weekly cycle low was right translated because the high came on day 35 and the low came on day 43. This weekly cycle, we don't know for sure if it's going to be right or left translated because the high was on week 21 and we don't know when the low is going to come. But what we know is that if the low comes after day 43, let's say, this is now a left translated cycle. I don't know. It seems unlikely that we're going to stretch quite that far. But what's more important, actually, is that we've already failed in the daily cycle. So I'll put this here to make it clear. See, as of yesterday, we have a failed daily cycle. That is important because a failed daily cycle is usually a pretty clear sign that you're now moving into a weekly cycle low. Yet at the same time, and I'll talk about this in future videos, there are other ways to estimate that you're already heading into an intermediate cycle. And so I knew that probably a few weeks ago once we made this swing high. And I'll talk about that in more detail, but essentially once we went below the low of this candle here, so by the time this week closed, you had a pretty good inkling that we were now moving into an ICL. And then weekly cycle low, ICL, same thing. And then you had this huge bearish candle that's still playing out. We'll see how he closed today, where we went even lower. That's your bearish follow through. These 3 days, these daggers. And so we'll see where this nets out, but we know it's a failed. So this is just further confirmation of something that we already had evidence for, that we're moving into a weekly cycle low. And so it remains to be seen if we're going to break below this pivot here. I suspect that we will, which is, again, corresponds to this, which is right around the 4,300 level, right below there. Seems very likely at this point. And the last thing I'll speak to is the monthly cycle, the yearly cycle, which is measured in months. And so the last very clear, unequivocal yearly cycle low we had was the COVID crash. That was without a doubt a yearly cycle low. That was very right translated. The yearly cycle started here, so January 2019. We had our top on February. That was 14 months from the beginning, and the entire yearly cycle lasted 15 months. You can see most yearly cycles are around 15 to, sometimes they stretch all the way to 20. Like this one was 19 months. This was during the huge bear market in 2007, 2008, 2009. But this is the last very clear yearly cycle low. The one before that was the madness we had at the end of 2018 when the Fed was raising rates and we had that Christmas Eve bottom. And so there's been debate as to was this a yearly cycle low? This almost certainly wasn't. I mean, it was 2 months of red, but we didn't get anywhere near the 10-month moving average. And that's one of the sort of cues. A cycle low almost always breaks through the 10-period moving average. So for a daily cycle, it's your 10-day moving average. For your weekly cycle, it's your 10-week moving average. And obviously for your yearly cycle, it's your 10-month moving average. Notice we're still above that. That is now at 44.33 approximately, and it is still rising right now. That's the other thing. The cycle low generally turns the moving average lower, so you can kind of see that here, right? Even though this was a very fast, sharp drop, but you can see how it at least flattens out. It's heading up, and then if you kind of really zoom in here, you can see it at least flattens out. This is clearly still heading up. Again, there's likely more pain ahead, and we've already created what's called a bearish outside candle. What that means is we made a new high. So notice we went this candle. This is the month of January. We made a new high above the high in December, and then we just collapsed lower. And now we've also made a new low. And we're still heading lower. We still have, quite a few trading days left, a decent number of trading days left in the month. And that's why I think now that we've made a bearish outside month, I suspect we're going to also make a bearish outside quarter. And what I mean by that is this is your quarterly chart. Excuse me, no, that was your 2-month chart. This is your quarterly chart. So each candle here, instead of being 1 month, for instance, is 1 quarter. So this is all of Q4. And not a coincidence, the low for Q4 was 42.80, which is that last intermediate cycle low. So it seems we've obviously got a lot of quarter left. That's all of February and all of March. So I suspect we get a daily cycle low. Again, now thinking about how the cycles blend together, I suspect, I took the numbers off for a second. I suspect we get a daily cycle low maybe next week, trading day 35, 36, which would be sort of in line with previous daily cycles. And then we'll get a bounce out of that, right? So, maybe a bounce into some point in February. And then we will maybe have a left translated daily cycle. So this one topped out on week 21. Maybe we have a top on like week 10 or excuse me, day 10, day 12. So you imagine, let's say 4 more trading days from here to a low and then 10 more trading days to a top. So maybe 14 trading days till the next top. We roll over and then complete that bearish outside quarter and probably undershoot. We probably don't stop at 42.80. We probably go a bit lower. And then we'll see what the bounce is from there. That would conclude another daily cycle, which would theoretically be, our weekly cycle low, which would theoretically be also our monthly cycle low. And so that is actually, if you, we are, oh, sorry, this is the quarterly chart. If we look at how many months have been in this cycle, it's already kind of stretched. So it's been 20. So this is month 22. And so theoretically, that would mean this is the top for this yearly cycle, and you can imagine February might start off looking okay because of the little rally we're having. And then we fail lower. We have a bar like around here. So something similar to this, right? Like something like that, something like that where we clearly break the 10-day moving average. This was a relatively mild one. But again, that quarterly chart is really signaling that we're probably going to fail to the other side, make that bearish outside quarter to go to at least below 4,300 as a starting point. And we're right now at 44.82. I mean, we'll see what we open at pre-market, obviously, but that means there's still a good couple hundred points of downside at least. So still money to be made on the short side, in my opinion. So I'll definitely release more videos, go a bit more in depth on some of the concepts, but this should give you a really good grounding on cycles. Again, I'll reiterate, focus on identifying whether you're in the advancing phase or the declining phase. And I'll release some future videos to talk much more specifically about exactly what signals tell you the declining phase has started, or that you've hit a bottom and a new cycle may have started. But hopefully this is helpful. I know a lot of people generally have questions about cycles. You want to focus on that cycle high, which for the daily cycle is called the DCH, daily cycle high. For the intermediate cycle, the weekly cycle, it's called the ICH. You want to be watching for those because, again, if you're not long, that's not the time to get long after that's been printed. If you're long, you might want to stay long depending on, how bullish the overall cycle is. But if you're not long, once you've seen that printed, that's your cue to wait for the cycle low, and that's going to be your great buying opportunity. So I hope this was helpful for everyone.